afternoon, ladies and gentlemen. Welcome to the second part of the Amsterdam Fintech Week. And it's going to be a promising afternoon. So it's a summit, so we're going to go to the top. And you have a very steep program in front of you. But a lot of nice speakers, nice panels, nice topics and presentations. So just enjoy, sit back, relax, and please participate whenever you want to. The first panel discussion will be about digitalization and digital first. So without further delay, I would like to introduce Richard Dorothy as being the moderator with his panel, and he will introduce his own panel. And it's about digital, right? Here you go, Richard.
So, afternoon, everyone. Did everyone have a nice lunch? I'm sure they did. I'm Richard Doherty, CEO and founder of Scale Up Consulting and author of Unlock Hidden Profit Zones. And you know what? I've been thinking a lot about this session today, and I really believe that in the world we live in right now of unprecedented disruption and in all honesty, market turbulence, a digital-first strategy is and should be top of the agenda for all executives and leaders inside fintech and financial services. And what does that give you? It gives you the ability to generate new value, to unlock new opportunities, and also deliver new efficiencies. And folks, you know, in a year like we've had in fintech right now, we all nursing some bloody noses. Having these three elements that I just mentioned allows you to move forward into an era of new growth. But in all honesty, doing that requires some big thinking and some big action. And I'm really happy to have with me today some really great guests, some brilliant guests. Ken, CCO of Molly, Karen, the founder of Bright Pensions, and also Isaac, the product lead at Bright Pensions. They're going to be joining me in this discussion today. So come on stage, guys, and let's go for it. So I think let's take this from the top. I know we all professionals, we all get digital, we all in that space, but let's put the groundwork in place so we all have a great conversation today, all right? And I think, you know, Isaac, if you can take us through, you know, what do you think are some of the key characteristics for companies out there to really get the most out of their digital experience and becoming a digital enterprise?
Yeah, it's a very good question. Thanks for asking. I think for most and foremost, it's a matter of companies seeing tech not as a call center, but really as a core enabler of your business. So secondly, having said that, it's also that digital mindset should not be just limited to the tech organization, so the product managers, engineers, but it's like should be throughout the whole company, including sales, marketing, customer service, and so forth. I think these are actually the most two important. And what digital does, it allows you to be really data-driven and make quick iterations and make decisions based on customer insights.
Yeah, I like it a lot. I like all the things you mentioned. And just to pick up on a couple, I mean, customer centricity, right? Having the data at your fingertips to make those decisions that really impact the customer, but also impact where your business is going. And to bring yourself, Ken, into the conversation, what other elements do you think play a critical role in the evolution of companies in the digital age?
Yes, I think you mentioned it. So being very customer focused for me is the absolute key. There's a lot of processes that you can digitize, but if it doesn't really solve a problem for the customer, I think you're not really working on the right thing. So, I mean, as a startup, a company to really think about, like, what do you want to achieve? What is really the need, the job you need to do for the customer? And then think about how you're going to work on that one. I think second one is, as you build your company, as you grow, data is really critical. And data for us as a company is a really key competitive advantage. I'll give you one example. So we can see a ton of data. So we do payments, transactions, and most of our customers are online web shops. So, and we know pretty much everything about these businesses. We know who they are, we know which sector they operate in, we can see the number of visitors in every single country, we can see how they're growing. So that's a really good insight, because based on that one, we can recommend the payment methods they need based on the vertical. We can recommend like which countries we should optimize their payments for, because we see the traffic, we see them growing, we see their needs. So, and as you build that up with your own data in terms of like how well do sales convert, you can really increase the whole performance of your company and also deliver the right thing for the customer.
No, I love that. To bring Karen into this conversation, you know, using data in the most effective way, having data is one thing, but using data in the most effective way is another thing. And it strikes me that if you're able to actually really understand your data, you're then sort of starting to think about other ways to monetize different parts of your business model. And maybe then start unlocking different opportunities for you as a business, and also maybe inside an ecosystem to really take advantage of.
Yeah, that's true. We see that especially on our employer side. So we offer the opportunities for employers to facilitate a pension for their employees. And with the tight labor markets as is, it's growing in importance to attract and retain personnel for a lot of especially scaling businesses. And we see that lowering the threshold for their employees to participate, as well as digitizing the whole flow, gives us a lot more insights as well, and enables us to increase participation as well. So it helps us grow, but it also helps the employer to be a good employer effectively.
And you know, are there specific case studies or working examples that you can give me of that have really made an impact for your business, or indeed for your customers?
Well, that's why we see what I was saying about the participation rate of employees. And depending on what you offer your employees, we see different participation rates, and we report that back to the employers as well, and help them tailor their offering to their employees and their employee benefits, so that the maximum number of employees can actually benefit that way.
No, I like it a lot. And you know, Ken, to bring you guys and Molly, I mean, you guys have obviously been on a rapid journey and doing some great things inside the space. And you know, if you look under the hood and you look at the data, and you look at different opportunities to monetize and different opportunities to really unlock the power of the business you built on that platform, what are you seeing right now? And what real life examples can you give us, and can you walk us through?
Yeah, so I mentioned how data helps us in the first step, like getting customers to become customers, which is really critical. The other one I would say is like we use a lot of data to help our customers succeed with making the transactions convert better. So as a payments company, like if you can increase the conversion of a consumer starting on the website and completing the transaction, that's one of the best ways we can help our customers grow. And there's a ton of data on that one. So as we got lots of history of data, we can see which transactions work well. We combine it with, fraud, for example, is a key reason why things could drop. So we optimize it with our systems. We also have additional products that are really working on optimizing the conversion. That's all powered by data. What we also do is, especially for the larger customers, we don't just limit our advice on the payment methods and on the checkout page. We also look at the customer's website and really start thinking, well, what can you do to make your website look better? And that could be small things in the checkout, but also, for example, like we know from experience that if you offer buy now, pay later solutions, that's proven 20% more revenues. But even things like before the checkout, you see on some websites, have you thought about this product? Or customers that buy this typically buy also that one. So again, that's data on the customer side, but we advise them actually that's how you could actually run your business much better. So
I love it. And being proactive in this manner, what is the feedback from your customers? If you're going out and you're giving value directly back to your customers day in, day out, week in, week out, what are they saying to you guys?
Yeah, that's the key thing. So our mission as a company is to be the most loved payments provider. And that's quite a unique position in the payment space. I work for two other payments providers, and I can hand on heart say that, it's not every company looks at it that way. Because we know if our customers grow, we grow ourselves. So that's a really strong connection. We've also invested in customer success management, another great way of using data to see how you can help your customers. And our customers absolutely love us for it. Because we might not always have the most international product because we're focused on Europe, so we're not always the strongest on that side. But we do really make the difference when it comes down to customer service. And the feedback is sometimes when we're at events, people even recognize the customer success manager by the name and by the faces. And that really makes me proud that we're doing something right there.
But always on this journey, Isaac, there's challenges and there's obstacles. And what are you seeing today as maybe let's say the top 3 challenges or obstacles that businesses out there need to overcome in order to truly unleash the potential of digital?
Good one. I think coming to top 3. Well, number 1 for sure.
Oh, 1.
It's definitely company culture. Especially for companies going from more traditional business to digital, it's a pretty tough cookie.
Yeah.
So there might be employee pushback or a senior management not supporting all the different initiatives. So that is in
Don't
my
work in
opinion
silo,
the
work
most
together,
important.
right?
Yeah, because it can be scary for many leaders because it changes it. In the ideal world, it changes also your management model from a traditional management model to a model where you empower your people to run experiments and also to fail. And that can be quite scary. So I think, showing by example, having strong product leaders, having strong technology leaders, that really helps. And also a buy-in from senior management up to board level.
I like it. And just bring Karen here. We mentioned strong leaders. And as a company, how do we, or as individuals, how do we build that culture around strong leadership, around leaders that don't always follow the herd maybe, and go out there and put themselves out there? What are you doing in your company to facilitate that?
Well, I think you need to be pragmatic at any level. So we're a business where compliance is part of at least half the product we actually offer is that you need to align both. And it requires you to be, you need to stick to the regulations, but sometimes it helps to think more proactively. You need people who have both the capability to understand the digital processes, but also have like a commercial spirit to them. But at the same time know where the boundaries are of the regulatory field we actually work in. And instead of just saying no, that doesn't comply, you need to come up with suggestions, and maybe if you do it this way, then it's okay, or this way, or this way. It really helps give the marketing side and IT people guidelines which direction they can think, and they can design the product and the process to that it does comply, but still.
I hear what you're saying, and I think it's brilliant. But it's also making certain that externally you're part of the conversation, right? Especially from a compliance perspective. You don't want to be given mashed potatoes and sausages if you don't like mashed potatoes and sausages, right?
But it also requires people to involve compliance early on in any digital processes you are redesigning, or a new process you are digitizing. So, and it requires a good dialogue.
A good dialogue between who? Between internal stakeholders, external stakeholders,
both.
A mixture of both?
Both, because a lot of external stakeholders don't know where your regulatory boundaries are. And if you give them free rein to start up with, they usually come up with something which doesn't comply at all, and you need to start from scratch yet again, which is like, if you talk about return on investment, it's a waste of your money then. So, and the earlier you involve the compliance part, the more efficient you can actually keep your design process.
And just, Ken, just staying on this compliance theme for a second, what lens are you guys looking at compliance through, and how are you maybe continuing to innovate, although there is more and more of, there's more and more need for this, for the understanding of compliance, and the burden of compliance is getting heavier.
Yeah, absolutely. So, I mean, it's interesting because both our businesses are quite heavily regulated. Yeah. I think the first lens that we always try to take is like, what does the regulator, what is a problem that the regulator is solving? Because sometimes when you just look at the regulation, you think, oh, this is really strict and it really doesn't help me, and what's the point? But there's always like something behind. This could be consumer protection when it comes down to buy now, pay later solutions, of course, financial fraud, protecting merchants from consumer fraud, all that kind of stuff. So I think the key thing is here really to understand like what does the regulator really want to achieve, but also starting, as Karen said, that conversation with the regulator about, okay, what do you want to achieve? Because very often what we want to achieve as a company is to make it as smooth as possible for our customers and their customers to make transactions to become a customer. And a good example from this is back in the day, but most payments companies, so you always have to do things like bank verification and just showing that you are who you are as a customer. And most companies, they say, look, send me a copy of your bank account statement. And that was the rule. You need to send a copy of your bank account statement. And we said, well, actually, that's one thing that's super easy to fake. I mean, you just change the name and people can just change an image, not that difficult. So we came up with a solution that said, look, we just do a 1 cent bank verification. You make 1 cent transaction, and then we check the name on the bank account is the same as the thing. So we got a lot of pushback on that one back in the day. But over time, the regulator became a lot more comfortable with it, and it kind of became the industry standard. And obviously right now with open banking, there are much better ways to do that. But I think that's the key thing. Start with what do you want to achieve, what do we as a company want to achieve, and see whether we can find a solution in that space.
Yeah, I love it. And, bringing out, you said back in the day, a few years ago, I was involved in a project that was reg focused, and one of the mantras that we as a leadership team definitely kept on communicating was a simple mantra. It was know before you go, and by communicating that, then living that, and doing that, ultimately. This regulatory project, which was industry, was a big industry project for this client in particular. They got a lot of value out of it. They got a lot of value out of it because they didn't just look at the regulation and get their sausage and mash. They looked at the regulation and actually decided, we decided that we're going to create a Ferrari instead of the usual. And there was a lot of digital transformation. There's a lot of connectiveness with inside that particular ecosystem to get the best out of a situation, working both internally and externally. And I think a lot can be said for taking a pragmatic approach to navigating your way through sometimes a complex and unclear situation. Isaac. Yeah.
So the question is really how to get it started.
Yeah.
So what do you need for that? So digital strategy is one thing, and a strategy is more about the what. But what comes first is the why. So as a company, you really should define like what's your vision? What is it that you try to achieve? It's always like finding a balance between adding customer value and business viability. So if you're on one side, so more on the customer side, you might be neglecting your business. On the other side, you might be losing customers because you're providing products they don't really need. So your vision should really dictate your strategy, and also that defines like what kind of people do you need. So what kind of process do you need, and what kind of budget do you need, and mix it up, combine that with having management buy-in, strong leaders. And also go out in the fields and experiment, talk to your customers and see what works and doesn't work.
And through this, you're able to really understand what your return on investment is, right? Yeah. And to bring Karen back into the conversation, what steps do you take as an executive to unlock that return on investment for your initiatives internally?
Well, on that front, we're a bit an odd dog out because we started by customizing an already standard product administration tool to build our service on top of, which for our starting phase was actually a brilliant move because it kept a lot of the risk and development risk and IT costs effectively very low on our side. And when you're scaling, when you start a company, you always expect growth to go through the roof immediately, but it always takes a lot longer than in reality. So it actually helped us to survive the initial first stage, and only once we became profitable, we started building our own system, actually having learned a lot from using like a standardized tool and system beforehand, which we tailored on some parts to our needs, but then you gain years of experience already in an existing tool, and you can improve so much better on that, starting again with an MVP, but at an MVP plus level already getting rid of a lot of the bugs and the hiccups you had in your initial processes and flows.
No, I like it, and I always refer to something I tell my clients. I'm going to tell you guys this as well. It's not the tech, unfortunately. It's something to do with people, which I also believe brings a lot of value to the conversation and the project and to a company going in a certain direction. And I always tell them to look at 3 metrics. And if these 3 metrics are, if you're maximizing these 3 metrics, you're going to be moving forward in the direction you want to move forward. But for whatever reason, if one of these 3 metrics is out of sync, then there's going to be some obstacles that you have to sort out. And, I like to refer to it as the LRC triangle, leadership, relationships, and communication. If these 3 metrics or these 3 KPIs are looked at and really understood, you can then really start digging down into different parts of your company and maximizing whatever it is that you need to maximize, right? And as we move forward, Isaac, into the rest of this year, into next year, what do you think are some of the antidotes or some of the things that people need to really understand in order to get the best out of their digital experience. Maybe they're restarting that experience. Maybe they are just starting it. But what would be your advice?
My advice, how to make that happen? That's a really good question because it's quite broad. How to easily answer this? I believe it starts with really empowering people to do discovery and see what solutions they came up with to existing problems for customers. And indeed, as you mentioned, like technology in its sense always comes second. Technology is super important, and without technology, most of our businesses won't be existing. But I think like the way we use technology should be like a solution to problems, rather than the other way around. And that's like a mindset that has to be within your company.
Brilliant. And we're going to wrap up now. One final thought from Ken. What should people out there be thinking about as they look forward into 2023?
I think again, start with the customer. There's a lot of things changing in the economy. We don't know what's going to happen with like when people have to get hit by big energy bills in the fall and the winter. So that's the most important thing. Start with the customer, understand them. And I will also say, see it through, don't give up. I'm a very impatient person, but when we started some digital initiatives, in the beginning, it got worse before it got better. And then the key thing is don't stop the thing that you started at that one point where it got worse, but really see it through until you see the real impact.
And Karen, last words from you. Words of wisdom.
Well, I think what you need is resilience as well. It's starting any business, scaling it, plan for the worst, and hope it doesn't come to fruition, and stick with it, because in the end, people keep on fighting. They actually end up winning usually.
Brilliant. Thank you all for joining me today, and looking forward to meeting all of you after the show. Cheers.
Thanks.
All right, thank you all. Thank you all. And thanks for discussing digital. And I think it's a very sticky problem, leadership and understanding digital. I was happy to interview the former CEO of Molly, Mr. Ausums, and he got digital. So probably that's why I have such a wonderful company. Anyway, thank you very much for this panel discussion. And we're catching up in time. So I'm gonna introduce somebody with I think a challenging topic today, with green and cloud. So there will be a topic. So the official title is the twin transitions of green and digital. Ladies and gentlemen, Paul Rowan from Google.
Hi everyone, it's a privilege to be here. I work for Google Cloud, working with financial brands globally on their transition into digital ecosystems. And today I want to talk about the twin transition of green and digital, which is European Union policy that these are twin transitions. And specifically looking at where can digital enterprises help serve customers in the transition to a green and digital economy in the Netherlands. And the Netherlands is interesting because, the Paris Agreement sets targets at a country level. It doesn't set targets for corporations or for consumers, it sets targets for countries. And every 5 years there's a review against progress review, and fresh targets are set against the 2050 goals for net zero. So in that context, the Netherlands and what the Netherlands needs to do in moving to a green and digital economy is going to impact on opportunities and business models in the Netherlands. So nation states are still going to be incredibly important in the years to come. And then secondly, I think I was about 8 or 9 years old in school when in early geography classes, and they explained that, you know, the Dutch reclaimed the land, they built dikes, and they created large swathes of land and how they managed the water. So I think I was about 8 years old when I heard that God created the world, but the Dutch created the Netherlands. And I suppose in that context, you know, a lot of other countries have a lot of faith in you that you can figure out what a green and digital Netherlands is going to look like by 2050. So lots of good questions today about how fintechs can collaborate with each other and with established providers, how to find new and profitable way of serving customers, empowering consumers to be sustainable, you know, regulatory landscape, and platformification. But a good framework to pull all these things together is these twin transitions of green and digital. So where can we expect an acceleration of digital ecosystems in the Netherlands? So lots of talk of ecosystems today, but these are digital ecosystems where market participants can collaborate digitally and extend customer journeys across two organizations. So digitization is key. Then how does open finance connect with other key initiatives and forces in the regulatory landscape? And then more practically, back in the office next week, how can digital enterprises help serve customers, serve in this transition to creating a green and digital Netherlands by 2050? So the foundation stone for all business strategies and business models is assumptions about the environment, what's going to happen in the environment. So I'm going to run through a number of assumptions, and obviously there's a broad margin for error when you're looking well out the curve in terms of the environment. But theme today is about collaboration, and if you want to collaborate effectively across the market with other enterprises, what's crucially important is that you have shared broad assumptions about the environment. You might have disagreements about things that are in the micro space, but at minimum, you need to have the same shared broad expectations about how the market and the environment's going to develop. So first assumption, data sharing collaboration will start to assemble a digital twin of the Netherlands. And this is going to comprise of many digital twins created by many organizations, with data moving between these organizations to inform and refine the twins. So people are going to start developing data sets about what business they think they should do and not do, and what's happening to the environment around them, to their customers and their suppliers. But in reality, no one organization is going to create a perfect model. To optimize their interventions, they're going to collaborate with their partners and share data across their digital twins. And so the digital twins need to be interoperable, and that's where APIs come in. Nobody can afford to hire hundreds or thousands of people to batch up data, do custom projects, and do once-off integrations across multiple enterprises. So increasingly, a highly connected green and digital economy will be an API economy. Won't be pushing the data out. You'll be consenting to, or your customers will be consenting to partners pulling the data out. So at an economic level, significant transition towards digital twins with near real-time data and sharing across organizations using APIs. Broad assumption. So every type of physical asset in the Netherlands that emits harmful gases or damages the environment can have a digital twin with an API that emits data about the physical asset. Key assumption. Second assumption, we talk about the circular economy, but the circular economy needs to be digitized. Obviously, the primary focus of many organizations is the digitization of its primary suppliers and its primary customer base. But thinking beyond that, if we're going to scale resource recovery and if we're going to scale product reuse in multiple secondary markets, these value chains need to be as digitized as the digitization of the primary value chains. And again, just as much as point-to-point integrations and once-off projects are uneconomic in your primary markets, in these secondary markets dedicated to product reuse and recovery, they also need to be digitized. So this also becomes part of your digital ecosystem. So again, at an economy level, broad assumption that high levels of digital connectivity, both for the primary use and the secondary use and recovery of products. Thirdly, there's going to be an increase in co-location of industrial clusters. this is already a thing before sustainability became urgent, but companies, businesses do cluster close together, traditionally for economic and practical reasons. But we can only assume that this clustering is going to increase because of sustainability, because demand can be optimized for things like, low carbon fuel sources or carbon capture and storage. We live in a semi-globalized world where some trade is fully globalized, some is quite local, but increasingly a long supply line is at more risk of being an unsustainable supply line. So more and more industrial clustering, and when we think about the mindset of industrial clustering, geography matters, to have a sustainable economy, but also businesses cluster close together because coordination mechanisms need to scale and organizational boundaries need to blur. And that's why they physically do it. And if you think about the mindset in digital ecosystems, obviously technical architecture matters, but coordination mechanisms need to scale and organizational boundaries need to blur. So companies closer together, even if independently owned, and increasingly sharing data at scale with each other about what they have, what they're using, primary purposes, and the circular economy. A broad assumption, but if you're going to collaborate on specific business initiatives across organizations, you need to have harmony with your partners about your broad assumptions. So we hear a lot about open finance and open banking, and has it been a success in PSD2 and what will be in PSD3, but how could it connect with other significant interventions on the regulatory landscape? So stakeholders in Europe and in the Netherlands obviously will very much track how good a job certainly the banking industry is doing in allocating balance sheet to the green transition. And they've started out a green asset ratio. And there could be arguments for several years between banks and the regulators about whether it's 8% or 18% based on the taxonomy, but the key number to think of is it needs to be over 80% by 2050. So the green economy needs to be fully financed by 2050. And in that context, simple arithmetic, there are two ways to grow the green asset ratio. You can grow it in a growing loan book, or you can grow it in a shrinking loan book. And a shrinking loan book is incredibly bad news for the Netherlands. Okay, so the mainstream economy is ultimately leveraged with debt finance. All of those factories and industrial machines and commercial buildings and residential homes and vehicles and transport systems, they're not funded fully with equity. There's equity in them, but they're leveraged up with debt. And in that context, if we can't get debt into this emerging new green economy, it's going to be fundamentally a lot smaller than the existing brown economy because it can't get access to the capital that it needs to scale. So thinking as an industry, and if fintechs are looking for opportunities to collaborate with lenders, whether challenger lenders or incumbents, to maximize the opportunity and the necessity to grow the green asset ratio in a growing loan book, the lender's business model needs to get access to as much potential demand for green loans as possible. Okay, and again, in the world of broad assumptions, if a lender to a Dutch brown business model or brown business or brown asset wants to pull back €1 million of loans, of debt finance from a business or a building or an asset that is deemed not able to make the transition, that lender might have to find 5 replacement loans of 200,000 each because this new emerging economy is immature. Okay, broad numbers, but then given that this economy is immature and many of these propositions may not be ready for debt finance because the concept is unproven, it's not fully viable collateral in terms of resale value, or the borrower is over-leveraged or has insufficient cash, the lender might want to say no 95 times, for every 5 times they say yes. So to avoid a deleveraging of the Dutch economy, if for every €1 million of inappropriate long-term lending that gets pulled back, 100 new leads might need to be found, okay, to avoid deleveraging the economy, which is a very significant challenge in terms of the origination of business. So I mentioned at the start that I work with Google Cloud's financial brand clients going into embedded finance. And this is something that we've discussed for several years, that customers spend hours a day on third-party non-financial apps compared to branded financial apps. Okay, and I suppose a few years ago, having these conversations, digital ecosystems and open business models maybe seemed a bit exotic to many European financial brands, but that conversation is changing, and there's a growing realization that, you know, in the pre-digital 20th century, lenders opened up branch networks of hundreds of branches because they wanted to grow and diversify their balance sheets. They wanted to put branches in the mature suburbs where older people had deposits, and they put branches in the young suburbs where young people wanted to borrow for their homes. And in this fashion, they were able to create a diversified balance sheet and grow their balance sheet. So what was a branch for? Well, it was to embed the starting of the customer journey to the bank's balance sheet, where they were spending hours every day. That's what the branch was. It was the end point of the bank's network. It was the starting point to transactions on the bank's balance sheet. They used branches to acquire new banking volumes, acquire new customers, to enter new segments, and occasionally directly to monetize services inside those branches. So branch banking was the embedded finance of the pre-digital 20th century. Okay. Now we're seeing in a digitally connected economy of the 21st century, we're seeing open banking becoming the equivalent of branch banking. It's where banks are now realizing that they can originate new banking volumes, acquire new customers, reach new market segments, and occasionally monetize, like they occasionally monetize some branch services. They are becoming the end point beyond their own apps of their digital networks. So where can digital enterprises help serve customers in the transition to a green and digital economy? You know, and there was a great presentation earlier today talking about sustainable mortgages, and a very clever offer where a homeowner can get a guaranteed discount on their mortgage if they upgrade to energy level A, and the bank has a partner that comes in and specifies the projects, whether it's a new boiler or solar panels, the range of projects, and their maximum cost to get to energy level A. And the plea at the end was, how can this be digitized? Okay, and that's the question for the fintech industry in the Netherlands to answer. How can that be digitized? Because at a European level, there's hundreds of millions of buildings that need to be refurbished. Okay, so when we talk about the twin transitions of green and digital, the reality is that a green economy has to be a highly connected digital economy. Cannot be done with pieces of paper and a pen. Okay, so somewhere along the way, you know, the scalability of digital photographs and video and artificial intelligence and machine learning has to be applied to all of these highly diverse environments to accelerate the fulfillment. And this is a key point because we hear a lot about, you know, green hydrogen and nuclear fusion and all of these green swans that will come along and do everything for us by 2050. But the reality is that new energy innovations take a vast amount of time to mature and to be ready for deployment and financing. And to put that in context, the first solar panel cell was demonstrated by Bell Labs in 1954. So in the context of 2050, we have to really think about the next 10 years, and the next 10 years has to be about mobilizing the deployment and the financing of existing green tech that we know works and makes a significant impact. So how is that going to impact on serving customers? Well, you know, although people are well-meaning and want to do the right thing for themselves and for their children and their grandchildren, it's not going to turn them into consumers that are not curious, impatient, and demanding. Okay? And this is a key thing, is that just because people do want a clean planet for their grandchildren doesn't mean they don't have practical concerns about the cost and difficulty of getting these things done in relation to their lifestyles and their assets. Okay? And in that curiosity, researching everything about their green transition on non-financial surfaces will take place before any intent is formed to finance that change. Okay, and this is a crucial thing. So if you think about it, there must be 10 times as many, at least, customer journeys where somebody is a business or a householder is going into various non-financial sites, checking to see what potentially might be done or could be done in relation to a more green life and more sustainable assets. And the ambiguity, it's already ambiguous in terms of, well, can my home be upgraded? Or can my fuel source in my factory be changed? Or, can I put a solar array in the grounds of my school? All those type of questions are ambiguous enough without the additional ambiguous problem of how is this to be paid for? Okay, and if it's beyond my current capabilities, can I borrow? And what will that cost? Okay, and are there particular products that the borrower or the lender would insist that I use? So this calls out the need for digital ecosystems. Okay, we cannot have this integration between the non-financial and the financial service providers taking place on a point-to-point customized integration basis. If the Netherlands wants to have a green and digital economy by 2050 that has the right impact on environmental damage, has to be a highly connected economy in a repeatable, modular, and scalable economic way. Because this curiosity needs to be capitalized on. This curiosity needs to be turned into commitment and then into consumption and spending. But people will still be impatient. And in that context, if you think about solar panels, which are a highly visible, mature green tech, first demonstrated the ability to turn light into electricity in 1954. They've done research on this, and how do they spread? How do they spread? Well, they don't spread based on who can afford them, and they don't spread according to who's been trained on environmental science. They spread based on peer-to-peer diffusion or neighborhood effects. So if you're a lender or a fintech and you're promoting solar panels or some aspect of solar panels, carefully consider your direct marketing budget, because something that's vastly more impactful than your direct emails is their neighbor gets solar panels. Okay, and that's what the research shows. So in that context, the digital customer journey to finance a solar panel begins when the homeowner sees number 12 across the road getting solar panels. They take a digital photo of the van parked outside, and they go into a non-financial app and begin to examine, if I get the same solar panels as that, can I put 3, 4, or 5 solar panels on my roof? Okay, and how much might that save in terms of energy costs? And if at that point the same homeowner can't identify whether they get 3, 4, or 5 solar panels, and if they finance that over 3, 4, or 5 years, and if they decide they might like to do it, but they not sure they can afford it, and not sure where the money's going to come from, and they say, you know what, I'll do it next year or the year after, that's really bad news for the Netherlands becoming a green and digital economy by 2050. Okay, so they're going to be curious and they're going to be impatient. And in the context of the fintech industry challenge, that's for the fintech industry to fix, both incumbent and challenger in the Netherlands, is that when somebody begins that digital customer journey, when they see their neighbor getting solar panels, that the potential financing of that customer journey is included in the most low friction way as possible. So the principles of achieving low friction in customer adoption are utterly crucially important in the sustainability context, because people will still be people. So just a few more minutes and then hopefully time for any questions or discussion or challenge. So the only thing we can be certain about in the transition to a green and digital Netherlands by 2050 is volatility and diversity. Okay, no single project is going to make that building energy level A or is going to make that factory sustainable. It's going to be a multitude of changes that require specialist technologies provided by specialists. Okay, so it's going to be highly diverse and it's going to be volatile. You know, the first version of the heat pump won't be the best one a better one will come along with a different provider. In between financial and non-financial, there needs to be a lot more partnering and a lot more data sharing right across the economy. But those partnerships will change as the technologies change and evolve. So what can we say about the economy? Lots more partnering at scale, lots of being able to absorb volatility and diversity. And in that context, that is a generic description of the intrinsic value of a digital ecosystem. An ecosystem adjusts far better to change than a single business model that's trying to do everything itself. So there'll be volatility in investment patterns. You know, venture capitalists will go towards some green tech, then they go in a different direction. That's going to bring volatility. You know, there's going to be different regional impacts. You know, coastal flooding is a concern here, river flooding in Germany. You know, I have long conversations with bankers in Australia about heat. So regional impacts of climate change will differ, and therefore the technology remedies will differ. There'll be volatility of public policy interventions. At the moment, we're seeing transformation frameworks like ESG. We're seeing some subsidies. But if countries fall a long way behind target under the Paris Agreement, we'll see taxes, we'll see penalties. There'll be stick as well as carrot. That's going to change, and that's going to impact on individual businesses and partnerships. And there'll be volatility of green tech adoption. It's not just based on who can afford it. It's based on their neighbors. It's based on the diversity of the effectiveness of the providers. How fast can we digitize the green services providers? So business models to capture business opportunities must not get locked into temporary demand patterns, and therefore point-to-point integrations, once-off projects for digitization don't make sense. You need to have a permanent, modular, optional way of digitally partnering, which are APIs. And recognize that this will be evolutionary, that some of the stuff that comes along will be greener, but not green enough. And some of the excellent technologies that come along will come along with providers that don't have enough capital. And we have to wait for another provider to come in with enough capital to fully scale up. So in that context, these are broad assumptions, but if you want to, you should have them anyway in the context of your own business strategy. But if you want to actually collaborate, especially around the green things, given that it's so, you know, it's going to be so volatile and diverse for many, many years to come. Like if any of us knew exactly which technologies were going to prevail, we could all give up our jobs and become venture capitalists. We don't know that. What we can actually get to understand is how, as businesses, we need to be able to collaborate and connect in a scalable, optional way. This is not pie-in-the-sky stuff. We see pockets of this already happening. We see some vendors in the Netherlands doing a fantastic job, of financial brands doing a great job of starting to treat software engineers that work for their partners and for fintechs as customers. You know, and this isn't rocket science. If you look at the ABN AMRO developer portal, their blog updates every few days with examples. You know, it doesn't have to be a new API. They're treating software engineers that work for their customers and their partners as customers to be engaged with and to be listened to and to exchange opinions with and exchange insights with. And if the Netherlands wants to become a green and digital economy by 2050 that has the right impact on the environment as signed up under the Paris Agreement, every single major actor in the Dutch economy needs to become fluent at treating software engineers who work for their partners and their customers as customers in their own right, because a highly scaled green and digital economy will be an API economy. Can't be done the old way. It needs to be scalable, it needs to be flexible, and as standardized as possible. So that's it. I should have warned you I'm Irish and I talk a lot, but there's 4.5 minutes left for any questions or disagreements on that.
No questions for Paul? No. You have a question?
I always have a question. Well, thanks for your talk, Paul. I think it's really interesting. I think how technology can also and should coincide basically with the societal transition. But not always is technology as accessible to the general public, right? So you see that the feeling that we have in society that we actually need this transition. At the same time, to understand the technology that they could use to get better at it. Do you have any suggestions on how we could bridge that?
That's a great question. When I think about the broad consumer base in the marketplace and the green and digital transition, and I say, okay, put myself in the shoes of the Prime Minister. And I come back from the Paris Agreement review meeting and, they were not very nice to me. Our country is behind schedule and we're not making it happen. Okay, and I go back and I look at supply and demand in my economy. And I look at the demand side and I see millions of voters with all that diversity of understanding and appetite. And the weapons I have are subsidies, taxes, policies, public investment. And then I look on the supply side and I go, well, I've licensed those companies, I've regulate those. So I can disincentivize significant business models or ways of doing business that I think is harming their adoption. So ultimately, there's green lobby groups talking about that banks should have to put 100% regulatory capital weighting on any new fossil fuel lending. In other words, so if they stop lending to certain business models, why would I buy shares in an oil refinery? Because as a shareholder, I expect them to borrow money. If they can just raise equity, I'll get diluted. My shareholding won't be worth as much. So I think when you're considering these broad assumptions about the marketplace, you have to ask yourself, when the regulators decide that more intrusive action is needed, they'll possibly recognize that it's easier to turn levers on the supply side than do it on the demand side, and then focus on what I might not be allowed to do. And will I be forced to be an open business model? So the Draft Data Act in Europe has an article that says, if I'm a user and I build a smart home, I buy a smart home system, or I use an app with my car, and it generates user-generated data. If I want to share that with a third party, then the vendor of that system is obliged for me to let me share that data. It's PSD2 for the Internet of Things. So in that context, I think that trying to make these assumptions, and then think, well, okay, could it get very, very regulated and intrusive? My broad assumption is they'll turn to the supply side to intervene before they try and deal with the demand side.
Thank you, Paul.
My protection is a broad assumption.
Thank you. Irish talk a lot.
Yeah,
you also drink a lot. I don't know if there's a connection between the two, but anyway, last question, and a short answer, please. But thank you very much.
Yeah.
It takes one to know one, as we say.
Yeah.
Here's a question. I think that the issue with this ESG and green and all the footprint, I think there's something where Google could help, in my opinion. Now it's become a totally ethical debate. The government tells us what's right, what's wrong. I think that's not the way to go. It's about transparency. If I want to invest in fossil fuel, it's my choice, but I need to know that it is fossil fuel, not something else. On the flip side, I have a great difficulty, even in the work that I do myself, where people say, oh, this is an ESG fund and this is green. Because all the data is so subjective. How can Google help to give us true, transparent insights on what is green and what is not green in, for instance, an investment fund?
Hello. It's hard to know how anybody can provide precise definitions of what is sustainable and what is green. Transparency does help. What I personal view is that we should focus on what's relatively predictable. So in that context, if those broad assumptions with a 30-40% margin of error are correct about how the economy will have to operate, and customer demand or government intervention will push everyone in that direction around data sharing and high-scale data sharing and customer experiences that go across providers, then get into the cloud. have an API strategy. It's not so much can we predict exactly what's going to happen now. It's how economically can we change our business strategy when our first set of assumptions have been proven to be wrong by this amount. So it's how can I make smart investments around digitization to build optionality and modularity into my business model, rather than saying, I've got to figure out precisely what's going to happen. The broad question is, in terms of how I do business, will I be able to absorb a good amount of volatility and diversity in both supply and demand? So as things change, I'm not too rigid. So I'm not sure if that answers your question, but I would say recognize that there's no one true answer at this stage. A lot of volatility and diversity is to come. Focus on how you do business and how you can mitigate that volatility and diversity, because there's going to be pleasant and nasty surprises ahead.
All right, thank you for the last words. Paul, thank you very much for your presentation and your view on green. So you earned your beer, I guess. Hey.